Equity Mates, from our mates at Spaceship. Investing made easy.
Welcome to another episode of Equity Mates. We are back for our deep dive on Asia and the semiconductor industry. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. Great to be back for a Tuesday. Great to be continuing this long-form style of episode or week, I guess.
Yes. It is our pleasure to welcome back to the studio Sunny Bangia from Antipodes Asia Fund. How are you going, Sunny?
Yeah, good, thank you.
That is good. So today on Monday, yesterday, we spoke about the opportunities to invest in Asian tech. This episode is going to be about the semiconductor industry, what's going on at the moment, its outlook, and the opportunities that it's presenting from an investment point of view. We have done a bit of content around semiconductors, but let's start at the top. What is a semiconductor and why are they so important?
Yeah. Look, in a very simple concept, there are like electric circuits, and the importance is that computing power doubles every couple of years. So if you think about that over time, that compounding effect, computing power has really exponentially gone up, and so our devices that all have semiconductors in them are getting smarter. They really have more functionality with them, and as a result, there's a huge increasing demand as applications now widen for the use of semiconductors.
And I think that's a critical point about applications widening, because it's not just phones and computers these days, it's everything from fridges. I think we found a Internet of Things connected toothbrush at some point.
What do you need that for?
Everything has silicon in it now.
Yeah, absolutely, and the design of these things is obviously, the application uses are increasing in our cars, as you said, in our homes, but also we're using more and more data in all aspects of our life. There's a huge amount of data collection. So what do we do with this data? How do we analyze it? And increasingly, semiconductors are going to be the answer of unlocking what we do with the data, and how we can make better decisions from those data sets.
So some people may have heard about semiconductors in the news recently because there's a bit of a shortage going on. Felt probably most acutely in the auto industry. Tesla had to shut down production for a couple of days reportedly because they couldn't secure semiconductors. A few other brands have had to take features out of cars because they couldn't get enough semiconductors. So for those who may have seen the headlines but not clicked on the story, what's going on with this semiconductor shortage, and what does it mean for investors?
Yeah, this is an interesting situation. What's happened? It's been this amazing demand shock, where in a way COVID happened and production shut down, because of the virus, and the companies thought, well, demand's going to take a hit as well, and it didn't. Demand remained fairly robust, and now production is trying to catch up with supply. Supply is trying to catch up with demand, and we've just had this incredible demand shortage, which is being felt most intensely in the auto industry, where semiconductors are used in cars, and quite frankly, demand for car sales has been very strong across the developed world, particularly in the US, where there's been a lot of fiscal stimulus. And we're kind of heading to the easing of this in the next sort of several quarters. We've heard kind of few rumblings out of a few US automakers that it's starting to ease as the production is finally catching up with demand.
Yeah. So 4 of the top 10 stocks in your portfolio are semiconductor manufacturers, sorry. So we've got Taiwan Semiconductor, which we'll discuss in a later episode, Samsung again, MediaTek, and SK Hynix. Are you able to give us a view on the landscape of companies playing in this space? Who are the main players, and why these top 4?
Yeah, absolutely. So the really interesting thing about Asia today is that some of the leading businesses in the semiconductor space are Asian companies, but it's a global business, it's a global industry, and so for example, you mentioned Samsung and Hynix. These are the 2 leading, and there are a few, but there's a 2 leading memory companies in the world, and if you think about memory, there's increasing demand for memory in our phones, but also in data centers, and these companies supply right into those kind of end markets. And these, in Samsung in particular, sits at the bottom end of the memory cost curve, where through cycle returns are very high. And we think, the memory cycle is in a good, strong uptrend, and we think that uptrend will last into next year, and these companies are poised to benefit from that. And then when you think about TSMC and Samsung, they're leading manufacturing houses of semiconductors. Semiconductor design that might still happen in the US, thinking of AMD or NVIDIA, the manufacturing, or even Apple, the manufacturing of that is happening in Asia. And Asia is leading the world in semiconductor manufacturing. And Intel kind of falling behind and coming to market late has really pushed them out of the leading edge semiconductor manufacturing market. And then finally, MediaTek, we think it's a leading design house. They design semiconductor chips that go into our smartphones. They currently have high market share with a lot of Chinese brands. And we just think over time, as the 5G build out continues to happen, as we get more 5G handsets, they're very well positioned to benefit from that trend over the next few years.
Now, you mentioned TSMC and how companies like AMD and NVIDIA can sort of build on top of that. Let's put a pin in that conversation because it is a fascinating one, but we're going to do a deep dive on TSMC and Samsung on Thursday. So that's a little incentive for everyone to stick with us for the rest of the week. You can't really talk about semiconductors these days without talking about geopolitics because it's such a critical piece of equipment in so many different products, and there's a lot of geopolitical tensions wrapped up, especially around the US-China tensions. So maybe for people who aren't really familiar with the geopolitical aspect of semiconductors, can you give us a bit of a 101 on why semiconductors are such a fraught issue and what the current situation is?
Sure. So as you say, the semiconductor industry over time has consolidated. This is both at the capital equipment companies. They've either merged and consolidated into a few, and then on the foundry side, where it's now effectively two sitting out of Asia, for manufacturing products that are quite mission critical in so many things, and increasingly over time will be in artificial intelligence and in data centers. So it is a national strategic importance for each country, and we talk about US and China, and I think that's very relevant. But I think over time, even Europe would want to have semiconductor capacity built in Europe. But at the moment, what we're seeing is that the US is inviting TSMC to come in and build manufacturing capacity in the United States, which is great for TSMC. Effectively, it's locking in customer business for the next decade. So we see that as a very good positive for this particular company. But as you rightly point out, this is something that's going to just happen. That countries are going to ask the leading edge manufacturers to build capacity in their jurisdictions.
So let's talk about investing in the industry and the opportunities that it's sort of presenting long term. There's no doubt that the industry is pretty cyclical. How do you think about that? Is it play the cycles? Is it take the long term approach? How are you playing that game?
Maybe to take a step back, people often think of cyclical industries as sort of resource industries that are really like commodity and price driven, but when we speak about a lot of these companies, when we speak about semiconductors, they don't feel like commodities. They don't sound like commodities. So let's start, why is it cyclical?
Yeah, I mean, the cyclical nature of this business is it's goods. These semiconductors are going into handsets. Handsets is seen as a cyclical. You have cycles. You end a particular 4G cycle, and handset sales sell off, and that has an impact to the rest of the industry. But what's happened over the past 15, 20 years is the makers of capital equipment and the makers of semiconductors have consolidated. It's become incredibly oligopolistic, and margins have gone up through time. And you are right in the sense that there is cyclical components to this industry over time, but the end demand is quite structural. And so what is the end demand? It's high performance compute. As we move in more and more into the artificial intelligence era, which arguably we're at the early innings of, and we're using big data for more processing and machine learning. The high performance compute demands will only increase over time for businesses across the world. And companies like Amazon or Google are at the forefront of building their versions of chips, again, manufactured by TSMC, to help their customers for their needs. And we just think that's a very strong structural trend, and this is a market that probably will double in size over the next 5 to 6 years. So, we're really playing for the long game here, which we think is quite a healthy, where there's quite a lot of healthy growth.
So when you talk about an industry that has seen such consolidation and margins increase, you often think, is there potential for disruption there? Is there a new entrant that's going to come in and see that margin as their opportunity? Are there barriers to entry that will stop disruption, or is it an industry that's ripe for disruption?
Yeah, it's an interesting question. You can argue potentially Intel was disrupted. Maybe they disrupted themselves, but they, fell behind. And one of the advantages we think, like TSMC has, is that it's a non, it's not an in-sourced business. It's a completely outsourced model. It leaves design to the best in breed. So let's say best in breed is NVIDIA, AMD, Amazon, and it focuses entirely on the manufacturing, which is a scale business and is incredibly capital intensive. So we are talking about $20 to $25 billion to build the next leading edge semiconductor fab.
That's a barrier to entry.
It's an incredible barrier to entry.
Yeah.
But that is the kind of capital we're requiring. And so can Intel be there? I mean, they could go hard. Where we think Intel has a bit of a disadvantage is that the design of semiconductors is kind of proliferating in the best of breeds around the world. And TSMC just wants to work with the best of breed partners for the leading edge. So as we move to the next generations, increasingly we feel that even Samsung will start to fall behind TSMC, and TSMC will move more into a monopolistic position. So we definitely think there's disruption potentially applicable in the design phase, where we think Amazon is doing interesting things using ARM-based architecture to maybe disrupt some of the incumbents such as Intel, maybe even AMD in that space. But let's watch that closely.
Jeez, what can't Amazon do at
I
this point?
know. Are there any European players?
So the Europeans have incredible technology companies like ASML, which are more in the capital equipment space. So TSMC uses that capital equipment in its manufacturing process. So they work as partners. So
Right.
TSMC will provide, this is what we think will improve the yield on our manufacturing, and ASM will customize back to how the customer wants to build. So it's a very jointly designed process, and ASML dominates in that space. But there are some other European-based companies in that are more in the mid-cap space. But by far and large, we think Asia's kind of dominating manufacturing, US is dominating design.
Yeah, it's interesting.
So we're almost out of time, but if I can sum it up, and if you can correct me if I'm wrong, there's like the capital equipment providers like ASML coming out of Europe, and then there's the actual manufacturers of chips like TSMC in Taiwan, and then there's the design of the chips that seems to be more happening in the US with the NVIDIAs and the AMDs. If you were to say which part of the industry, the designers, the manufacturers, or the suppliers is most interesting to you as an investor, what would you choose?
Look, we're quite excited about the manufacturers, largely because they work with best of breed designs. Now we think over time, even China will come up the design curve, and ByteDance will develop quite interesting chips that, again, will be manufactured by TSMC and maybe even Samsung. But even like Tesla's leading edge AI chip manufactured by Samsung. So you can see that the design aspect is actually very interesting, and we think there's a lot of interesting players, but they're typically coming to two companies in the world to get them manufactured at scale, and we think that's a pretty strong trend for the moment.
Fascinating. Well, Sunny, that does bring us to the end of our episode. We will be joining tomorrow with Watchlist Wednesday, where we'll be going through 3 stocks on your watch list. So very much looking forward to that and appreciate your time.
Thank you.
That is the end of the episode for today. As I said, we'll be doing Watchlist Wednesday with Sunny tomorrow. And if you would like more information on what we're doing at Equity Mates, head to equitymates.com. We do have an email list that goes out every Monday with plenty of information, one of which was some interesting stuff on the semiconductor industry. So that's at equitymates.com/email. So make sure you sign up to that. But otherwise, we'll continue with some stock chat tomorrow, Ren.
Can't wait.
Equity Mates, from our mates at Spaceship. Investing made easy.